Hi folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you about the power of technical patterns plus news events. Formerly, I had shared a technical chart with you guys about the pound yen, about an inverse head and shoulders pattern. And here's your left shoulder, here's your head, and then here's your right shoulder. So you have to picture a person like they're hanging upside down. Our head obviously is taller than our shoulders, so that's where the pattern comes from. But what the power behind the pattern is that you get a lower low there, a lower low there, and then here's the key, the higher low. Again, we went over this pattern here recently, but I just want to recap for anybody who may not have seen it. And then there's this neckline here that comes across the tops. And this break wasn't as clean and textbook as I like to see them. There's textbook patterns, and then there's how they end up working out in the market. So this broke upward, which is where I got long, and I thankfully had a stop way down low. They don't normally pull back this far into the pattern. They'll actually break out, normally pull back to the neckline, and then launch again. Pound yen happens to be a more volatile pair, more of a trendy V-shaped moves and spiky and that sort of thing. So it tends to be a little more volatile in its turns. This was no different. So it breaks out, pulls back, then fumbles around here on the biggest of its breakout, and then rockets higher. We're down at 143 here on the break, and we're at 148.42 as of this filming. So I mean, you're talking 550 pips almost in this move, and very quickly. Now, do head and shoulders patterns normally explode and get to their targets this fast? No, they do not. And the target is you take the distance from the head straight up to the neckline, which I've got here measured by this yellow line. I've projected this yellow line up here, same distance projected up here, which would get us to about right here in the 146-ish level, which is a minimum price target that these chart patterns give. And I found just from experience that many times they will go past those targets, but minimally they go that far. They don't normally run up to their targets like this within hours. So why did this one? Well, it was a chart pattern coupled with a news event. What happened? It was actually an unplanned event. You wouldn't see it on the calendars. One of the BOE, Bank of England, officials was talking, and the market took it as if the Bank of England was going to pause or stop its asset purchasing program. In other words, quit printing money, quit buying up the bonds, quit doing all the quantitative easing that's watering down their currency. And so if they were to do that, that would be a bullish sign for the pound, and hence the move. And man, was it a move. So the traders really got on it. Your oscillator actually flipped positive here, and this is where I actually got in here because we had a break here, flipped positive to the oscillator. It pulled down, but what kept me in it was that the oscillator didn't go negative. It stayed positive. Even if it had been shallow, I'd have still hung in there with it, kept stops way down below the old lows, and then it breaks here, pulls back here, forms a hammer, which is a bullish pattern here, takes off, and practically doesn't look back on the news event. And so occasionally you'll get those, but what I like is there's many times where a news event will happen afterwards that a chart pattern was alluding you to was coming anyway. It's amazing how many times that will happen. And that's really why I like to learn about technical patterns, head and shoulders, triangle patterns, wedges, you name it. And we use these a lot in the currency cross service. They really tip me off to a lot of potential trades. So that's the lesson in the chart of the day today. I appreciate you being an avid viewer of it. Thanks so much. Bye-bye.